Hello guys and welcome back to the channel. So in this video we're going to talk about a news that came out very recently that Tesla is planning to freeze hiring worldwide and lay off 10% of its workforce because Elon Musk has a super bad feeling about the economy. So this is very disturbing in many ways. One of them is because I also feel super worried about the economy, and I did a video that was released actually just before this video where I'm talking about that the Fed is probably overcorrecting and many of the things that are causing the inflation are self-inflicted, like the energy prices. And the proposed solutions that the administration has come up with, like switching to green energy, is a multi-decade process and it's not going to quickly handle the inflation. In this video, we're going to talk about what Elon might see, because he obviously has more data than we do, what this means for the stock price, and is the stock a buy now? Currently, after this news, the stock fell 8%. It's soon going to be below $700 again. And I want to discuss if this is a buy now or how you should think about Tesla stock. And if you're new to the channel, welcome here. Please make sure you hit the subscribe button if you like what you see here. And if you want to support the channel, you can check out the first link in the description below, which is a link to our Patreon. You can support us for $5 a month and you get access to all the tables and evaluations for all the companies that we cover on this channel, which is currently mainly Palantir and Tesla. Let's get into the meat of this video. So here's the article that came out from Reuters, and they basically are claiming that they saw an email. They don't have the email. I'm going to quickly read it. So CEO Elon Musk has a super bad feeling about the economy and needs to cut about 10% of jobs at the electric car maker. He said in an email to executives seen by Reuters. The message sent on Thursday, entitled "Pause All Hiring Worldwide," came 2 days after the billionaire told staff to return to the workplace or leave, and adds to growing chorus of warnings from business leaders about the risk of recession. Almost 100,000 people were employed at Tesla and its subsidiaries at the end of 2021. According to SEC filings, the stocks fell on this news. Currently, they're down 8.35%. So what does this all mean? So what do we know? Because there must be something more behind the picture that is not being talked about. So first, let's look at what we know. So the quarter of doom is coming for Tesla. Their Shanghai factory was closed for about a month fully, and then it was only partially reopened. And we know that their most profitable car production comes out of Shanghai. So this is very likely super much hurting their margins. They're going to really disappoint on the earnings. And remember what I say on every video, that the Tesla stock price is super dependent on continued growth of Tesla. So whenever the growth prospects of Tesla gets hit, the stock price gets majorly hit. There is a lot of questions that are unanswered on this. For example, they are just now opening 2 new factories, one in Austin, one in Shanghai. As far as I understand, they are in the early to mid stage of recruiting for these factories. And obviously one question is, are they seeing such a slowdown in demand that they're going to run these factories on one shift, and instead of quickly ramping up the production, they're going to delay the ramp up of the production because they don't see orders coming in? So here's my conspiracy theories. I want to go from, good to least bad, and, then bad, and then the super bad versions of what might be happening behind the scenes that we don't know about. And then I want to show you my Tesla valuation model. I actually haven't done the work on how it would change, so you're going to see my honest reactions on it. You can get access to this table on our Patreon, $5 a month, first link in the description, and then you can play around with it to see what you think, because I don't want to give you advice. The least bad of this is, there has been a lot of warnings. For example, Jamie Dimon, JP Morgan CEO, came out a few days ago and said he sees an economic hurricane coming, and we need to brace ourselves. Obviously, when the Fed is tightening, usually it does end in a recession at one point when the tightening gets too much. And, you cannot always have a bull market and good times. So maybe he is just very proactive and, they have hired too many people because they have been on a hiring spree. And this is just, a good way to trim the fat. And there's no big issues behind the scene. This would be a quite okay scenario. So the next scenario is that the quarter of doom is coming. Shanghai was closed for too long, as I mentioned before, and he knows that the investors are going to be super disappointed. The price is going to fall, and he's, trying to go in front of the wave and, trim the fat, make the company more adapted. And again, if this would be the case, this would be like a one-time occurrence, and I could live with this as an investor because, yeah, it's a one-time thing and it's going to be over. So now here's the worst case scenario. So as I mentioned in many Tesla valuations videos that I've done, that Tesla has never seen a demand issue and they haven't needed to advertise. Advertising for their cars would very much hurt their margin. And, they have a lot of back orders. In the Q1 2022, they reported their lowest number of inventory. I believe it was 3 days inventory of cars. However, things can change insanely fast. And, people, if they feel insecure in their finances, because at the end of the day, 50, 60, 70,000 average sales price is not pocket change for a lot of people on a car. And obviously, if you get into a tough situation, that is one of the things that, you can cut back on. You can keep your old car for longer. You can buy used cars instead of upgrading. And yeah. However, one thing that is very interesting in this situation that I do want to add here, which is very hard even for me to forecast. It's funny how I said even for me, I'm not a financial analyst or anything like that. But anyways, for me, it's very hard to forecast that if the oil prices stay at these elevated levels, and all the signs show that the oil prices are going to stay at these elevated levels, then many people are going to be thinking, maybe if I was driving an EV, it would be way cheaper. I could cut my costs. And I don't know, because it's a little bit of a funny dynamic that people get scared and then they pull back on the spending and then they don't buy expensive cars. However, in a way, the gas cars are the ones that become very expensive, and maybe like this dynamic helps EV adoption. This we don't know. So obviously, if he sees that the orders that are coming in are slowing down and it's to that level that they need to scale back on the factories, and they're going to slowly ramp up the factories, it's going to super much hurt the margins. It's going to hurt their growth. It's going to break a lot of people's Tesla theses, and it's going to be very catastrophic for the stock for many reasons. One of them is because I haven't seen yet a calculation where people count with how much margin advertisement would take out. Because there's two ways to spur demand. One of them is you cut your prices, which they can easily do, but it hurts your margin. Or the other one is that you don't lower your prices, but you start advertising, and the advertising costs money. Therefore, it hurts your margins. Again, it's very important, especially when you have these situations, because when the stock price falls as much as it has, it might be a fantastic buying opportunity. You remember, you have to buy great companies, and Tesla is a great company. I don't really believe that the long-term story of Tesla is impacted by this, because remember, the world is going to turn over to EVs. Tesla is way ahead of the competition. And then on top of it, none of the models that I use or many other people that I use fully think with, robotaxis, full self-driving, and the Tesla bot, which apparently also is going to be shown off in September with maybe a working prototype. So you have to also think with this that the robotaxis and the Tesla bot, right now you get it for free when you buy the stock because nobody is thinking with it. So the question is Tesla at a great price? So now we go over to my model. In my model, I was already very careful because remember that they have said that they will grow comfortably 50% per year. And I have already lessened this to 30% per year in my base calculation, and I increased, this is their margins from the 2021 bookkeeping, 16%. They had like 20 something percent when they closed out the quarter. So I was thinking that, they keep it, and then as they move more and more into robotaxi and software products and, blah, 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 it further increases their margin. The calculation takes us to 2025, and if they grow 30% every year, it's 153 billion income per year. With a 25% margin is a net operating income of 38 billion. I'm even thinking with stock dilution, that would leave us with this many shares. So based on this net income, if you have a 60p, which is completely reasonable if the company is growing 30% per year, that would give you a 2 PEG ratio. I just want to show that when I made this table on the 22nd of May, the price has rallied since this. So the P is likely over 100 now. The price to sales is at 30. And the PEG ratio is at 3. I'm thinking with a significantly lower P and PEG ratio than the stock has currently. I can have the argument that maybe this is still too elevated. That remains to be seen. And I believe that this is one of the risks with this model. This model gives me a stock price of $2,078 a share in 2025. And if you want a 4-year 30% compounded annual growth on your portfolio, you need the stock price to be below $728. Currently the stock is at $707, so based on this calculation it would be a buy. But here comes the news that just came out today. So what if they're not going to be able to meet the scaling, or they're going to start advertising and hurt their margins? This is the vehicles that they're going to deliver. As I am significantly more pessimistic in the growth than Tesla management, what I want to change in this model is actually their margin. So what if instead of 25% margin, they go down to 15% margin? That's a 10% margin drop because of advertising. Remember, I'm also seeing this at the first time. So I think that if we are in a recession that is very prolonged, I also want to say it could be that 2022, 3, and 4 are very bad years. And then the Fed is dovish again in 2024. And then, the economy is much better. And then they need to do, less advertising, and, they will have better margins and, possibly even a better P if the Fed is dovish. Just want to say that. Okay. So if the margins go down, but the growth stays the same, I believe the PE could stay the same, because the PE also has to do with the growth, and it has to do with, how much their bottom line is growing. It would not necessarily be hurt. Just for calculation's sake, I'm gonna take it a bit lower. So now it says that the stock price is going to be at $1,039 in 2025. Remember, this is a worst case scenario. Now, if you would want to have a 30% return per year until then, the stock price would have to be around $364. Now, if you're happy, this is what I really like in this table, is that, you can choose. So if you are happy with a 20% return per year, the stock can be at $501, and it's still a good price for you. And because this model is so pessimistic, I'm counting lower on the growth than management. I'm counting way lower on the margin than management. I'm counting lower on the vehicles delivered. We are discounting robotaxis. We don't have Tesla bots in the picture. So if the price is around $550, I'm going to buy the stock. I actually sent money to the stock market with my dad. We have $30,000 there. And I knew that the market would rally because, it has been falling so much, and you can't fall in a straight line. I am hoping that Tesla is going to fall below 600, and at around 550 for my own, risk reward, it would be a buy, even with the worst case scenario of these news. And then if we have a more positive scenario, then it's just an insanely good stock to buy. Let me know what is your price when you would add to your position, or you would open a new position in Tesla. And if you have a position in Tesla, please let me know how much and what are your expectations and how long are you planning to hold the stock. I really appreciate you for watching this video, and I will see you in the next one.